And finally, after a multi-year effort by the Bitcoin community, all 11 much anticipated Bitcoin Spot ETFs have been approved by the SEC and will begin trading tomorrow. And then Bitcoin's journey has been a strange and wild ride, and exactly 14 years ago today, Hal Finney tweeted that he was running Bitcoin. In the years afterward, Bitcoin's creator Satoru Nakamoto disappeared, and Bitcoin began its slow journey from a curious collectible for cypherpunks and cryptographers to a payment mechanism for the dark web to a speculative bet to give a means of outpacing inflation, and today to a full embrace from the traditional financial system. Heavyweight names such as BlackRock, ARK, VanEck, and Fidelity can now offer American investors a simple, non-custodial means to invest in Bitcoin. Today's announcement process was underwhelming after an emotionally draining week of confusing signals. This was reflected in the market, with the Bitcoin price failing to move up on the announcement, suggesting an exhausted market that was priced in the approval. Instead, it was Ethereum that won the day, moving up to $2,500, a 10% jump, while Bitcoin, for today at least, remains steady at $45,700. And tellingly, Gary Gensler, in his announcement letter today, couldn't resist a final dig at Bitcoin. And Gensler wrote, "Though we're merit neutral, I note that the underlying assets in the metals ETPs have consumer and industrial uses, while in contrast, Bitcoin is primarily a speculative and a volatile asset that's also used for illicit activity, including ransomware, money laundering, sanction evasion, and terrorist financing." While we approve the listing and trading of certain spot Bitcoin ETP shares today, we did not approve or endorse Bitcoin. Investors should remain cautious about the myriad risks associated with Bitcoin and products whose value is tied to crypto. Whatever happens next, despite the tepid price action and tepid signal from the SEC, today is a huge win for the global Bitcoin community. Let's recap the wild weekends that was. And earlier this week, U.S. spot Bitcoin exchange traded funds, ETFs, issuers finally disclosed their fees. There are now multiple Bitcoin spot ETFs, and the fees they charge are the primary way they compete with each other. Many of the issuers have continued to update their fees in the days leading up to approval, and a game of cat and mouse that has been described as the ETF Terrordome, a reference to the ruthless take-no-prisoners approach required to succeed at the sharp end of the asset management business. And then charging the least is crypto-savvy fund manager Bitwise, with a fee of just 0.2% after a 6-month waiver period of no fees. ARK21 shares is next, 0.21%. Franklin is at 0.29%. BlackRock, the world's largest asset manager, has set its fee at 0.25%. This is much lower than many had predicted, given BlackRock's brand and market size. And I've also Bloomberg ETF analyst James Seafarge wrote on X that the Bitcoin ETF fee war has sharp elbows. These fees are so low and the ETFs will trade absurdly tight, penny-wide bid-ask spreads, and without any commissions on most platforms. But Grayscale, however, which plans to convert its Grayscale Bitcoin Trust into an ETF, has the highest fee at 1.5%. However, they have included a clause about the ability to make waive fees.
Plus, Grayscale already has $28 billion of assets under management, whereas the other applicants are starting from a position of zero.
What's clear is that the lower than expected Bitcoin ETF fees are good news for investors, and they will put pressure on crypto exchange fees. U.S. exchanges such as Kraken and Coinbase will now be competing with the ETF providers. And for those wishing to invest in Bitcoin, the ETFs look very attractive indeed. It has been a wild week in the lead up to today's Bitcoin ETF approval, with mixed signals, false reporting, an SEC hack, and a series of botched announcements by the SEC and the exchanges involved. First, perhaps it's a sign of today's hyper-connected, extremely online world, and the average person wouldn't have noticed, but the denizens of crypto Twitter have ridden an emotional roller coaster this week as official announcements appeared and then disappeared on various websites and exchanges. The SEC has fought hard to get its ducks in a row, but ultimately it was the wisdom of the market that proved correct. Bitcoin failed to move much closer on final revelation, showing that the market has indeed priced in the ETF approvals for now, at least. In a series of events yesterday that were memorably described as a dope rodeo, the official SEC X account appeared to announce that Bitcoin Spot ETFs had been approved. However, 15 minutes later, the SEC head Gary Gensler announced the SEC Gov Twitter account was compromised and an unauthorized tweet was posted. The SEC has not approved the listing and trading of spot Bitcoin exchange-traded products. The price of Bitcoin surged quickly to $47,600 after the bogus announcement before dropping to around $45,500 after Gensler said, "Fake news." We'll leave the final word on this to Edward Snowden. Also this week, SEC head Gary Gensler published a thread on X stating that those offering crypto asset investments/services may not be complying all the applicable law, including federal securities and laws. Investors in crypto asset securities should understand they may be deprived of key infos and other important protections in connection with their investment. Gensler wrote, investments in crypto assets also can be exceptionally risky and are often volatile. A number of major platforms in crypto assets have become insolvent and/or lost value. Investments in crypto assets continue to be subject to significant risk. But Gensler's thread concluded with fraudsters continue to exploit the rising popularity of crypto assets to lure retail investors into scams. These investments continue to be replete with fraud, bogus coin offerings, Ponzi and pyramid schemes, and outright theft, where a project promoter disappears with investors' money. Gensler is committed to being seen as the responsible adult in the room when it comes to protecting American investors. The spot Bitcoin ETFs, which track the actual price of BTC rather than its derivatives like Bitcoin futures, represent a breakthrough for the U.S. market. While such ETFs have gained approval in Europe, Canada, and Brazil, the SEC has previously rejected applications due to concerns about potential market manipulation. The approval of 11 spot Bitcoin ETFs in the U.S. is a milestone for crypto investors and an opportunity for financial advisors. These ETFs, renowned for their efficiency and popularity, could unlock a $50 trillion market across financial advisors, retail investors, and private banks, fostering market maturity and institutional investor confidence. While the underwhelming price action today shows that the market has indeed priced in the ETF approvals, what happens next could surprise. Bloomberg senior ETF analyst Eric Balchunas has reported that BlackRock may break a first-day ETF flow record with a $2 billion asset injection on the first day of trading for its spot Bitcoin ETF. That would be a strong catalyst for the Bitcoin market and suggest momentum is just getting started. As the crypto community celebrates the SEC's decision to finally approve spot Bitcoin ETFs, the cryptocurrency market is poised for an extended bull run. The approval of Bitcoin spot first ETFs coincides with a potential demand shock for Bitcoin, with the April 2024 halving offering investors a unique confluence of factors that historically result in favorable outcomes. The question is, how will the market respond? As Bitcoin has already experienced a 61% rally since early October, driven in large part by heightened expectations of approval for a spot Bitcoin ETFs, some market observers are forecasting a sell the news induced pullback. So comparisons are drawn to past market events such as the debut of CME Bitcoin futures in December 2017, Coinbase's NASDAQ listing in mid-April 2021, and the introduction of various futures ETFs, including BITO. Historical trends indicate that Bitcoin, following rallying periods during these events, experienced subsequent crashes in the weeks that followed. For instance, the 3 days leading up to the SEC's approval of the first futures ETFs saw Bitcoin surge by 15%. However, a month later, the cryptocurrency reached a record high of $69,000 before plummeting into a bear market that endured for over a year. Analysts caution that historical precedents suggest a potential post-ETF approval downturn, emphasizing the importance of monitoring market dynamics in the aftermath of regulatory decisions. Others are more bullish, however, with the likes of Max Kaiser and Samson Mao predicting billions of dollars of new flow into Bitcoin when ETFs start trading. And of course, the rumored $2 billion in immediate inflows from BlackRock, also very bullish, is a new report from Standard Chartered Bank predicting significant inflows into the spot ETFs. The bank predicts inflows of $50 billion to $100 billion this year, meaning that between 436,000 and 1.3 million Bitcoins will be held in US ETFs by the end of this year. At that volume of new inflows, Standard Chartered said Bitcoin could reach $200,000 by the end of 2025. Now that the ETFs are approved, expect a marketing war to begin with the various asset managers competing to communicate Bitcoin's narrative to an army of financial managers. In the long term, nothing could be more bullish for Bitcoin.